Topic number 2, costing terms and concepts under management accounting for ATD and CPA intermediate level students. Yeah, and I'll be looking at costing terms and concepts. So every time I'm teaching these classes, I must always make reference to past paper questions, because past paper questions, basically, these are our Bibles and our Qurans pertaining to what we are basically teaching here, what we are learning here. So just like how a good pastor cannot teach without making reference to a Bible, the same case with a good CPA teacher must always make reference to our past papers. So by the time we finish doing today's topic, I expect ourselves to be able to answer the following questions. These are the questions I would expect us to answer. Like we have April 2025, question number 1A. So I'm just reading the questions alone for us to be able to have them at the back of our minds. So like understanding cost behavior patterns is important in making management accounting and cost control decisions. In relation to the above statement, explain 3 types of costs which can be classified according to cost behavior. When I teach you, you'll be able to answer this question without even me coming to give you answers again. Next question, December 2024, question number 1A. Definitions of the following types of costs as used in decision making. So, what are controllable costs and what are discretionary costs? Yeah, discretionary costs. We'll be able to answer that as I just take you through today's concept. Then we have December 2024. Explain the following terminologies as used in business decision making: opportunity costs and opportunity savings. Very, very important. So then we have in this case here, August 2024, question number 1A and B. With reference to cost estimation, cost classification, distinguish between the following types of costs: semi-variable costs versus semi-fixed costs. Then we have prime costs versus marginal costs. Then we have part 2 of this, benefits of implementing a cost database management system, DBMS, for inventory. Yeah, we have August 2024, question number 2A. Identify 5 challenges faced by a business in implementing a cost accounting system. Yeah, so that is the last one. So we go back to our content of the day. Let's go back to the content of the day, which is cost. Yeah, so here we are. Topic number 2, cost terms and concepts. And I start right away with the definition. So whenever you hear about the word cost, what comes, ladies and gentlemen, in this case here to your mind? Yeah, so you see, if I say, for example, that it has cost me 200 shillings to move from Nairobi to Thika, what does that mean? For us in management accounting, cost will be any value of resources that you sacrifice to be able to do your production or offer any service. So how much has it cost you to make a chair that you are selling? So of course you will be able to sacrifice, you will be able to put up some resources in terms of timber, in terms of labor, etc. So whenever we hear about cost, ladies and gentlemen, we should always imagine that the cost is the value of resources, money, time, effort used to produce goods or services. Then how do we identify what we call tracing of costs to the right item? In terms of cost identification, there are those costs that are linked directly to what we are producing, and there are those costs that are indirect. So in terms of traceability or identification of the cost that we incur to the product, we shall have, ladies and gentlemen, two types of costs here. In terms of identifiability, we shall have costs which are direct and the costs which are what here? Indirect. Come back to our chair. When you make a chair, you need timber. You see, timber cost will be direct. Timber cost, this will be a direct cost because you can easily say, hey, this chair took up timber worth 1,000. I can directly trace the timber cost to this chair that I've produced. We refer to those costs which are traceable to the products that we produce as direct costs. And then we have indirect costs. Indirect costs, ladies and gentlemen, are those costs that you can't really trace them directly to whatever that you have produced. These will be those costs which are common, which are incurred for the benefit of many units that you are producing. A very good example, ladies and gentlemen, for you, for example, you are 40 students here today. RCM pays Zoom account. We pay about 7,000 shillings every month. So when we pay these 7,000 shillings, can we trace this expenditure to each student? No, we can't say, for example, that Ian, in this case here, Ian has done what here? Ian has spent the 7,000. No, there is a student who is lost there. Please, this is management accounting. I'm sorry. Go back to your class. If you go to your WhatsApp, you will be able to see in this case here where you belong. Sorry for that. If you go back to your WhatsApp, ask a question there. You'll be guided. Sorry for that. All right. So like, for example, rent. If we are in a physical classroom like now here today, I am in a physical classroom. This physical classroom, you, for example, pay rent of 40,000 or even 50,000 a month. You see now, rent will be an indirect cost because rent is not being paid for the benefit of just one student. It's being paid for the benefit of everybody, including myself, the lecturer. But you see, for example, if we print some papers, for our students, like past papers, and then we give these past papers to each student, then you can see the past paper cost now can be traced to a student. So in terms of traceability or identifiability, we have two types of costs. We have those costs that you can trace to the production of each unit, and we have those costs that we can only trace to all units. Very good examples are rent, and we shall be seeing later on. These indirect costs, we also call them overhead costs. We also call them overhead costs like that. They are on top of every other item that is being produced, on top of every item, over the head, on top of every item that is being produced. Could you kindly give me, in this case here, a thumbs up if you are able to understand, my explanations? Can you kindly give me a thumbs up or even a thumbs down if you're not able to understand? Thank you so much. We are good to go. So we can now continue. Thank you so much. So you're told your direct costs can clearly be linked to a product. E.g., for example, flour in bread. You see, you'll be able to say, for example, what amount of flour has gone to this bread, and you'll be able to cost it. Indirect cost supports production, but not directly traceable, e.g., factory rent, not directly traceable. Then now we go to cost classification as per your syllabus. So cost classification as per your syllabus means grouping costs into categories to make them easier to manage and control. So for example, you have those costs that will be classifying as direct costs versus indirect costs. Yeah, we have what we call direct versus indirect. So for example, material and labor. Material and labor will be very good examples of direct costs. Because, ladies and gentlemen, remember my carpenters. We shall agree with my carpenters. We pay them on piece rate. For every chair they produce, we give them like 1,000 Kenya shillings. So you see, the labor can be identified to the chair. We'll be able to say this chair has cost us in form of materials 500 timber, labor 1,000. So you can trace labor, we can trace materials. Those ones, we shall be classifying them as direct costs. And then we have indirect costs will be like the rent, what we call overheads. Overheads. We should also be able to see that these indirect costs, in most cases, they are paid periodically. Periodical costs. Periodical costs. You see, like rent, we pay rent on a monthly basis. Now, let me ask you a question. Assuming we are in a classroom, all of us, this classroom rent is 50,000. If in a whole term, I only have one student in that class, can I go and bargain with the landlord, tell the landlord that, you know what, I only had one student, please reduce the rent for me? No, rent is periodical. It's not product-based. It is periodical. And the periodical costs, all of them, will be put under what we call overheads. Overheads like this will be put under what we call overheads like that. Yeah, thank you so much. So you can see direct versus indirect. Material labor, these are direct, and then overheads is indirect. Then we have fixed versus variable. Like rent is always fixed. Raw materials will be variable. Listen and listen to me very well, ladies and gentlemen. Whenever we talk about costs, we have in this case here some other classification. Like we have what we call variable costs. So variable costs, they behave like this. If this is quantity and these are costs, variable costs will behave like that. So what are you able to see here? That if we produce zero units, variable cost will be 0. If we continue producing more units, variable costs do what here? They increase. Variable costs are also known as direct costs because they are directly proportional to the quantity that you produce. Direct costs. And then we have those costs which are ever fixed. So costs that behave like this. So if you're keen enough, you must realize that fixed costs are ever constant. Even if you produce 0, you still have to pay. Even if you produce 0, you still have to pay. Just like, for example, at home, if you're paying rent, and then in a particular month, we say with my entire family, we are going to Hawaii. Yeah, out of the country, even for a whole year, to go and relax, having taught for so long. You see, there is no way you'll come and tell the landlady or landlord that, you know what, that I wasn't in your house for the whole year, that now I can't pay, in this case here, rent. He'll tell you no. Rent is ever fixed. It doesn't matter whether you're going to use the house or not. Rent is a fixed cost. Very good example there. John Ogueo is asking, where do we classify insurance? So for example, insurance, those of you are paying insurance. Insurance is periodical. You pay insurance like on a monthly basis or even on a yearly basis. It's not dependent on the product, like how you have used, for example, your vehicle. No, it's periodical. So insurance cost, unless you are given other information, insurance cost will be periodical. It will be indirect. You see, like insurance, if it's a bus, for example, full coverage. A bus, for example, they'll tell you, pay me $1 million as an insurance. Does it matter how many passengers will board the bus in the year? Does it matter? No. Even if you keep on moving just one person from point A to point B. So you can see in this case here that this insurance cannot be traced directly, cannot in this case be attached to one person. Thank you for asking that question. Great. Please feel free always to ask questions. You know, there are students who will tell you that, Mwalimu, at times I fear I may ask you a question that you may not be able to answer. I'm an old man, and I've taught this paper for more than 20 years. Yeah, for more than 20 years. Yeah, and even if I don't know what you are asking, of course, I'll be able to humbly tell you I don't know, and then I'll be able to do what you research. But I like CPA students because I always learn a lot from CPA students as well, because they keep on asking questions. So please feel free, ask questions as many as you can. So we continue. Then we have what we call product versus period. Product costs, these are the direct costs. These are now the costs which will form a base for our inventory costs. Yeah, inventory. So we have here product costs, costs carried into stock. Yeah, these are carried into stock. They are carried into stock. So for example, when you are valuing your stock items, you'll come and say, this chair, this is my inventory. How much in terms of materials, in terms of labor, in terms of variable overheads. You see, those are product costs, because at the end of the day, I'll be able to say, this chair, yeah, as I talk of opening an inventory and closing an inventory, is worth this much. So whenever you hear of product costs, these are those inventoriable. We call them inventoriable costs. Costs at which your inventories will be carried out in the financial statements. Unlike periodic costs or simply period costs, those ones are overheads. We don't take them to the inventory costing. Those costs, we normally lump them together and put them in the income statement as expenses. So product versus period. Costs carried into stock, those are products, and then periodic costs are expensed immediately. They don't become part of our stock. Then we have what we call cost classification, very important. I'm normally a very brief man. I've taught you before. Most of you, of course, I've taught you. I'll be able to clear this in the next 30 minutes maximum, and then we go to other things. So cost classification basis, but we can classify cost on the basis of time. On the basis of time, we'll always have two types of costs. We shall have what we call historical. Historical costs are past costs. They are already incurred. So we also call them what here? Sunk costs. Sunk like this. Sunk costs. Sunk costs. So these sunk costs, they have already been incurred. That, hey, you are making this kind of a pen. Where have you reached? We have been able to produce it fully. Then what have we incurred? Material cost, labor, etc. So those will be historical costs. So meaning that historical costs are always irrelevant in decision making because already they're incurred. Whenever we are thinking about decision making, we talk about futuristic costs. Futuristic costs. So in this case here, futuristic or budgeted or predetermined. They have not yet been incurred. Then we have in this case here by time, predetermined or standard costs. These are forecasted or budgeted in advance, but they have not yet been incurred. We always call them futuristic costs. Futuristic costs. Ladies and gentlemen, we have classification by behavior. Behavioral classification, we have fixed costs which behave in a funny way. These fixed costs do not change with the output. They remain the same. They're also called periodical. Like we normally get our salaries on a monthly basis, e.g. salaries, rent. Then we have variable. They change with the activity level, e.g. fuel per unit. So this fuel, of course, ladies and gentlemen, the more the kilometers you do, the more the kilometers that you do, the more the fuel. Like material cost will be variable. Labor cost, the more you produce, the more the laborers you need. Then we have semi-variable. Semi-variable costs are partly fixed and partly variable. So whenever I talk about semi-variable cost, my good students, semi-variable cost, my good students, these are how semi-variable costs look like. Semi-variable costs, they look like this. Yeah, you can see in this case here, they are not starting from zero. Yeah, so in this case here, they have two components. They are having a fixed part and a variable part. So you can see fixed ever constant, variable now dependent on the quantity that we are producing. The quantity, this one you have to draw it. This one will be very, very important for you to draw down the semi-variable cost. So semi-variable costs, semi from the word semi, partly fixed and then partly variable, partly changing and partly variable. So please, once you finish drawing, put your rather mention there why for yes, and then I will be able to continue with my explanation. I should be able to continue my explanation once you draw. Don't start picking rulers. No. This is something you do just offhand. Yeah, freehand. And of course, for those of you who have not yet made a decision to join a college, do not hesitate joining RCM College. We are the #1 college in East and Central Africa. Yeah, tops like that. In terms of CPA, I mean, you look for a college which is accredited, a college which does graduation. Yeah, a college with a big name outside here so that you will be able to get jobs easily outside there. And of course, that is RCM. So our number is 0793 555 000. 0793 555 000. We've been in this business for so long. We've been able to, in this case here, I mean, evolve with the time. So already they're finished there. So what have we said about semi-variable costs? They are both fixed and what here variable. They exhibit fixed component and a variable component at the same time. Good example is electricity. Let me ask you a question. Those of you who have ever been involved in paying electricity expenses at home, in a particular month, if you don't use electricity at all, you don't consume electricity at all at home, will your electricity bill read zero? Will your electricity bill read zero if you don't use it at all? Will it read zero? Somebody. Assuming you close your house for a whole month, you don't use any electricity. You will say no. Why? Because we have some minimum. I don't know whether there's anybody who could be knowing what is the minimum, the very least, the meter rental fees. Let's assume it is 200 bob. Let's assume it's 200 bob. So it means that this 200 is fixed for everybody. But now there is a component here which depends on the kilowatts you use. If now you use more kilowatts, so you'll realize that if this kilowatt usage, for example, is 2,000, then your total bill will be the electricity variable plus now this 200 like that. So ladies and gentlemen, please listen to me. Semi-variable costs are those costs which are partly variable and partly fixed. And then an exam, you must draw this for your examiner. Then there is one cost which I have not mentioned there that I always like explaining and writing it here by myself. So we have here the fourth one. Fourth one is what we call the stepped fixed costs. The stepped fixed costs. So these are those costs that remain constant. Those costs that remain constant over some range. Over some range beyond which they increase, in lump sums, in lump sum amounts. So please, this fourth behavioral classification of cost, I would want you to put it down Tell us there, number 4, stepped fixed costs. And then you write that these costs remain constant over some range beyond which they increase in lump sum amounts. And once you finish writing this down, please say there why for yes. Say there why for yes. Say there why for yes. Please say there why for yes. Thank you so much. And if that is the case for all of us, then we have to draw some graph. We always communicate best by drawing some graph. So they remain constant over some range. Beyond this range, they decrease in lump sum and then they like that. So in this case here, these are the stepped fixed costs. Yeah, stepped fixed costs. You can see the steps like staircases. Yeah, stepped fixed costs. Just for example, as you guys draw, remember this is quantity, this is costs. So these are the stepped fixed costs. Stepped fixed costs. Yeah. So like, for example, if we have a very good arrangement with our landlord here, we tell our landlord that we need only this room. But should we get, in this case here, more than 50 students, I will need another room. So then what will happen, my good students, is this. What will happen, my good students, is this. So this room will be 40,000. If I get more than, so 40,000 up to here. 40,000 up to here. If I get, in this case here, more than 50 students, I will need another room. So this other room, for example, could be going for 10,000. So now you can see in this case here, this rent will increase by a lump sum amount of 10,000. Now I start paying 50,000 ATC. So stepped fixed costs are those costs that are remaining constant for some time, beyond which the increase in lump sum remain constant, like that. Most importantly, that you should be able to pick something that you should be able to use in your exam explanation. So can I go to something different? Yeah, please, we have to keep on talking. You must keep on talking. Can I go to something different now? All right. Moha Jane, all right. It's only one student who is giving me green light. And please don't feel, yeah, thanks, Brian, thanks, Irene. Then I can go on. And please don't feel afraid. Nobody will be, I'm your father. At RCM, they normally call me Daddy. Always feel free, even when you call me. When you call me on the phone, call me Chief Ninja or your dad, academic dad. Then we have, ladies and gentlemen, classification of expenses by the functions. What are the key functions that these organizations get involved in? These organizations, for example, they will be doing production. There must be lots of administration. There must be lots of moving these goods up and down. Yeah, up and around to distribute them to the customers. And then, of course, we must be asking for loans. We must get loans to, in this case here, financial operations. So by function, we shall have production costs, which are the factory expenses. We shall have administration costs, office expenses. Yeah, selling and distribution costs, sales team costs. We shall have finance. Remember, this is interest. For those of you who did financial reporting with me last semester, finance is interest. Yeah, interest and any loan charges. Also, in terms of business functions, we shall also have some expenses that we shall call marketing costs for promoting our products and business outside there. So we have number 1, classification by time, classification by behavior, by function, and then number 4, we have by stock relation, which already we have covered. So by stock relation or inventory relation, we have product costs, part of inventory until sold, and then we have period costs expensed in the same accounting period. By decision relevance. So we have those costs which are relevant, which are futuristic. Yeah, so relevant Costs that affect a decision, e.g. future costs, they're also called avoidable costs. We'll be able to see them as we progress. Yeah, avoidable costs. Yeah, and then we have irrelevant. Irrelevant are sunk costs or unavoidable costs because you have already incurred them. These are the fixed costs. Whether you like it or not, like rent, you have to pay. All right. But now relevant costs, ladies and gentlemen, as you'll be seeing later on, these are those costs. If you make this decision, you can avoid them. Yeah. But that should not worry you. I'll be getting into more details regarding this. And then number 6, we have hereby management control. There are those costs, ladies and gentlemen, you as management, you can hold them by the horns. Like how you can hold a bull by its horns and then you say, you bull, you are not moving anywhere. Today I'm with you. You bull, you're not going anywhere. So those costs are called controllable. You can control them. So controllable, a manager has influence, e.g. over time. As a manager, I can tell you as an employee, today you are not doing overtime. Or if you do overtime, I'll not pay you. You see, I'm in control. That's a bull that I can hold by its horns and sway it the way I wish. Those are controllable. And then we have uncontrollable expenses. These are those expenses you as a manager, even if you are to lift up your hands and cry 1,000 times, they can never change. They shall always remain the same. Uncontrollable, manager cannot influence, e.g. the tax rates. It's 30%, it's 30%. You can't influence that. Depreciation method, the moment you have decided, it will be like that. We have a rent. There is nothing you can ever do to reduce rent. You can be a good negotiator, but if it's contractual, I mean, that will be it. So, ladies and gentlemen, never forget that whenever we are looking at cost classification, we have classification on time basis, classification by behavior, classification by functionals or functions, stock relation, by decision relevance, and by management control. Now, with your permission, I will be able to go 2.4. We're almost finishing. I told you I don't spend more than 30 minutes to teach. No. So 2.4, types of cost systems. Cost systems. We're going to be having costing systems here. And our costing systems, number one, for example, when you give me a job, like for example, I'm an auditor. I run an audit firm by the name Aura and Company. On top of being a director at RCM, I also run an audit firm. And in these audits, we normally get jobs. And before you start doing a job and even tendering for the job, it will be very, very important for you to do what you to cost it. Because jobs are very, very unique. So job costing used to each job is unique. You know, there are those companies that produce standard goods and services. They're standardized. Like if you go to Sarova Stanley Hotel today, a cup of tea, taken by Mr. A will cost exactly the same as a cup of tea cost by what year, or rather drunk by Mr. B. So see, their tea preparation is really standardized. Then those are not jobs. But when you go to a garage, you see how the mechanic will be looking and repairing your vehicle will be very different from him repairing another person's vehicle. Another one will come with dents all over. Another one will come, in this case, like almost a write-off. So those are unique jobs. So you must involve what we call job costing. Job costing. Unlike batch costing, batch now will get like many units at the same time. I can see. Yeah, Kennedy, I'll be able to share. I got a problem in sharing notes. Don't write them too much. I'll be able to share. Do you have a class rep? Do we have a class representative? Perhaps I should, if I don't get to know how to share it in Zoom today, I should be able to share it with a class rep. Yeah, this topic too. What do we have done? Topic number 1. Let me just try sharing this. I don't know. The last time I shared very easily, and I normally share very easily. Only that today,
Just give me your email. If there is somebody who has a very easy email, you can give me your email. Then I share. Somebody who is in the paid group. Somebody who is in the paid group, they can give me an email. I share with them, and then they transfer. And then they transfer. That will really be good. But meanwhile, just allow me to continue. These are your materials. I have to give them to you. You have paid for them. You've paid for them. I was trying to explain something to do with batch costing. This is for groups of similar items, e.g. bread baked in batches. So one batch has 1,000, all of them at a go. Process costing for continuous production. For example, how we make sugar. Sugar goes through various processes. There is crushing over sugar cane. There is, in this case here, lots of processes. Yeah, the same case with these chemicals there. Then, for example, if you got a contract like how we make roads, yeah, how we make roads, bridges, they should be able to use what we call contract costing for large, long-term contracts, e.g. road construction. Then we have what we call activity-based costing, where we trace, first of all, cost to the activities. Which activities do we need to be able to produce this product? We have to do this activity number one, set up machine. So first of all, trace the cost to the activities, and then now we remove those costs from the activities to the products. So we do cost tracing to activities, then to products for accuracy. There is a whole topic on activity-based costing, which I'll be doing. So this should not be able to scare you at all. All right. Then we have maintaining a cost database. Maintaining a cost database. We need a cost database, and this cost database should be computerized for us to be able to track our costs. Yeah, we have to maintain this. Yeah, please allow me, even this attaching it here as maybe it's my machine which has a problem. Just allow me to do that later, please. Because I've tried sending it to Ian. Yeah, we shall overcome. I'll do that later. Yeah. Last time I did send Kennedy, I've explained I have a challenge, a little bit of challenge. Of course, if I move out of this room, I'll be able to send very fast. Don't raise your tone up. I have to finish the class and then I send later. All right. So maintaining a cost database, a central record where all cost information is stored. That's what we call a cost database. Uses. It helps in preparing budgets, because now we have the total costs. It helps in variance analysis. There is a whole topic on variances. It will be able to help us in terms of pricing decisions. Provides reliable data for management decisions and control. This cost database must be updated regularly, accurately, and should be very easy to be accessed by those who have authority to access, not by everybody. Yeah, so that makes, or rather brings us to the end of this topic. Then we should be able to look at now various questions from our past papers to acclimatize ourselves on how this topic is tested. So now we go straight away to our past papers. Are they ready? Are they ready for our past papers, these ninjas? Are they ready? Great. So like April 2025, question number 1A, understanding cost behavior patterns is important in making management accounting and the cost control decisions. In relation to the above statement, explain 3 types of costs which can be classified according to cost behavior. Cost behavior, I told you we have got variable costs, fixed costs. We have in this case here semi-variable and the stepped fixed costs. So answer, fixed cost, they remain constant regardless of output. Example, rent, salaries. Variable cost, they change directly with activity. Example, raw materials, fuel, the more you use this vehicle, the more you'll be able to incur in terms of fuel cost. Then we have semi-variable cost. It's a mixture of fixed plus variable. Example, electricity, there is a base fee plus now the usage. And then we have what we are calling semi-fixed. Semi-fixed or step costs. They stay fixed within a range, jump when activity passes a level. Like hiring another supervisor after exceeding production. So is that answer and explanation okay? Is that answer and explanation okay, ladies and gentlemen? Is that answer and explanation okay? Can I move on to another question? Great. Thank you very much. Great. Thank you very much. So that I should be able to go to December 2024. Question number 1A. They want us to define what controllable costs are and discretionary costs. So I told you, ladies and gentlemen, that controllable costs, these are those costs that can be influenced by management, like the one of overtime. Even direct materials, because they are directly related to what I produce. I can say I'm not going to produce so many things. So controllable costs can be managed or influenced. Example, direct materials overtime. Ladies and gentlemen, when I ask you for some favor, automatically it will be on your discretion to decide whether you're going to do that favor for me or not. Ni kupenda kwako. So ukisikia discretionary, these are those costs, ladies and gentlemen, that basically will be incurred if the management makes a decision to incur them. So they are basically linked on management decisions, management deciding. They're normally decided by management. They're not linked to output. For example, the management can come and say, hey, this time round, you're not advertising at all. Kupenda kwao, you're not advertising at all. This time round, you're not training at all. If they say they're not training, then of course there won't be any training cost, and therefore there won't be any training fees to be paid. Then we have what we call committed costs. Committed costs cannot be easily avoided in the short run. They were not asked here, but I just brought them here. I just brought them as a bonus for you people. So committed costs are those costs which cannot be easily avoided in the short run. You have already committed, it's contractual. You cannot run away from these committed costs. Good example is rent. Rent is a committed cost. Because you committed, it's a contractual cost. Can't run away from it. At least in the short term. In the long term, you can say, fine, and I want to release your space. But in the short term, like 1 month, 2 months, you can't run away from it. But you see, like the other day, I saw somebody on the newspaper. Actually, it was a girl. So this girl had really lengthy plans with some gentleman in terms of doing a wedding. One day to the wedding, the gentleman disappeared. And this lady chose to take this man to court. There is quite a lot of things that happen when, of course, you're planning for a wedding, even if it's a lady. assuming you're not even putting your finances into it, but there is a lot of emotional attachment. And these people, this person, I mean, this lady felt that, hey, this person belongs to jail. Let me take him to court for the emotional damage. So if you were the judge, would have you jailed this gentleman for having run away on the very material day of the wedding, for having, in this case here, broken a covenant? Would have you jailed this guy? You tell me, would have you lifted your hammer and said, go to jail? Tell me the truth. Tell me. You guys have to talk to me. Please tell me, what would have you done if you are the judge? You know, that is not a committed activity. Trust you me. Whether we do this wedding tomorrow or not is at my discretion. I'm still the one to make what here a decision. All right, that's a discretionary activity. And actually, a man who runs away like that, if you're my daughter and you are here, a man who runs away like that, don't even try to force him, because there will arise bigger problems in the future. There are some doors, whenever they are closed, you thank the Lord. There are very, very many people, good people outside there. So committed is contractual. There is no contract for me to marry you. Like rent is contractual. That's committed. Like when you buy a vehicle, then automatically you have an obligation. You're obligated to be paying insurance. You cannot get outside here with a vehicle without an insurance sticker. So insurance becomes a committed cost. Discretionary costs, they can only be in a card if I want. Like now, these young men who ran away from this very particular wedding, in this case here, he was able to avoid. You see, discretionary costs are avoidable. Committed costs are unavoidable. Unavoidable. Like in this case, no binding agreement, nonetheless, there existed a marriage certificate to make it prima facie. Very good. Very good. Now, then we have another one that I thought of just bringing here, because I always try to scan through your past papers to ensure that we basically lock up everything. So we have uncontrollable costs. Uncontrollable costs, these are beyond the manager's control, like the government, taxes, interest rates. There's nothing. These are macroeconomic. They come from outside there. They're bigger. December 2024, question number 3A. I know you are tired, but you're almost finishing. Explain the following terminologies as used in business decision making. Opportunity cost, ladies and gentlemen, is the value of best alternative forgone. For example, choosing school over a part-time job, you lose wages. So wages lost becomes opportunity cost or opportunity forgone. Yeah, opportunity cost. So come up, for example, ladies and gentlemen, some of you who are here today, I'm so sure you may have had other plans that would have given you some little money is there, like a part-time gig. So if you have been able to say no to that part-time gig, you've lost some wages. So the lost money is what we're calling an opportunity cost, an opportunity lost. And then we have opportunity savings. Yeah, cost avoided by selecting a cheaper option. Like, for example, those of you normally do this bad thing of drinking alcohol. And maybe you had planned in this case here to go and drink alcohol today in the afternoon. Please, my sons and daughters, stay away from alcohol. If you had planned to go and do that, you see there you would have spent. But now God has spoken to you, I've attended my class. You see, in this case here, there is a cost now you've forgone. You've saved it. That's an opportunity for you to save. That's an opportunity saving. An opportunity saving. You've avoided that cost. Sunk costs. These are past costs already incurred, irrelevant for future decisions. Yeah, examples you'll be looking at this, which such expenses already spent. Then we have an incremental cost, extra cost of adding one decision over another. Yeah,
Incremental cost, ladies and gentlemen, this will be from the word increase. That in this case here, for example, should we decide to produce one more chair? What is this extra cost? Should we decide to bring in one extra supervisor? What is that extra cost? That is what we call an incremental cost. Extra cost of adding one decision over another. With your permission, I'll be able to go to August 2024, question number 1A and B. But I can see that there is a chart. I always follow the chart. Yeah, thank you so much. When we come to marginal costing, you're going to see that incremental cost is the same as marginal costing. However, you see marginal costing is for just one unit, marginal MC, one. Incremental costing can be for that one or even more units. Incremental costing is bigger. Marginal costing is a subset of this. Thank you for that question. August 2024. Question number 1A and B. With reference to cost classification, distinguish between the following types of costs: semi-variable costs and the semi-fixed costs. What you're supposed to know is that whenever you see semi-fixed, that is the same as the stepped fixed costs. Those ones that remain the same over some range, beyond which they increase in lump sum. Semi-variable are the ones that are partly fixed and partly variable. Semi-variable, part fixed, part variable. And the semi-fixed, they are variable, changes gradually. Semi-fixed jumps suddenly. Semi-variable changes gradually. Yeah, they don't just start from zero, but semi-fixed, they jump suddenly. Yeah, I think that's good enough. I go back to the chart. I can see there is a chart. Utakula nyama, okay. We shall overcome. I've not understood the joke yet, but we shall overcome. Then we have prime versus marginal cost. Prime are primary costs. All direct costs are primary. Those are the ones that are inventoriable. They're the ones that we call product. The one that will form part and parcel of the inventory. So prime cost, these are direct materials plus direct labor plus any direct expense. And then marginal costs, these are cost of one extra unit. Cost of one extra unit, mainly variable. Prime costs are broader. Marginal costs focuses on incremental. I think that's good enough. Benefits, this part B of this question, benefits of implementing a cost database management system for inventory. We shall be able to get accurate cost records if we have a DBMS. This shall be able to support better decisions. It helps us to save time and money. You know, I've been an auditor for so long. At times you go asking for information regarding costing, and then people are looking for information in so many files, so many offices. When we have a centralized DBMS, it's all about just getting to the system because it's very well classified. You simply pull from the system. So you're going to save lots of time and the money searching for information. It is centralized, easy to access data. Yeah, it leads to better inventory control because everything is in the system. Yeah, if you want historical data, you'll be able to get it very easily and very good for compliance reporting. You don't have to remember everything. Ladies and gentlemen, the most important thing is that whenever we have a system, we shall be able to save on time. We shall be able to save on cost. We shall be able to get accurate reports. Our information is centralized. We shall be able to even use this system to plan ahead very well. We shall be able to control our inventories and the other things regarding what we have in the system. You don't have to use even my language when we are explaining. Then we go to August 2024, question number 2. I know you are tired, but we are almost finishing. We're almost finishing. Identify 5 challenges faced by a business when they're implementing this DBMS, database management system, a cost accounting system. Yeah, that it will be very, very costly to start with. Even the time of implementing is going to be very, very high initially. Yeah, we lack resources. We lack experts to run this. There will be resistance to a new system to change. So we have a high setup cost in terms of software training, complexity in operation, resistance to change from staff. When you are starting, especially data accuracy problems. Yeah, integration with our QuickBooks, for example, or any SAP or ERP that you're making use currently. Going to be very, very tough to integrate this with the existing systems. Time consuming to implement. So that is the end of my today's class. You greatness of mine. I hope in this case here you have enjoyed the session. You told me that anytime I'm free, I should be coming over to teach you. And that is exactly what I've done today because I'm Amze. And I hope you have enjoyed the session. Can I make a good teacher? Can I make a good teacher? Can I make a good teacher? Please give me a response. Or even a bad teacher can tell me like this. And of course, if you're interested then in my teaching and our classes, the state calling RCM College. Yeah, we are the #1 college in Eastern Central Africa, fully accredited by CASNEB. Fully accredited by CASNEB. Yeah. Thank you so much. Thank you so much. So I'll be organizing to give you these notes in the course of today, in the course of the day. Thank you so much for your compliments. Thank you so much. Best of them all. We shall overcome. Thank you so much. So see you later. You'll tell me whenever you are free. Whenever you are free, like Sundays afternoon, I'm normally free. I can be coming in to revise with you. Bye and bye-bye. Thank you so much. Okay, Jan, I've seen your comment. I will also be coming there. Yes. For FM as well. Yeah. Thank you.